Now let's take a look at gold, and we are using the MACD by itself to see whether it could have helped us stay out of this severe pullback in gold. Ever since the highs in 2011, we've seen that gold has generally been on a downward slope. So we are trying to use the MACD here, trying to learn how to read the MACD so we can see how this could have prepared us to at least be defensive as far as gold is concerned. Of course, whenever you're trading, you're going to use other indicators, but for this session, we're just going to consider the MACD. Now you can see that right off the bat here, coming into 09, 2010 to 2011, when gold had a nice run, we can see that the MACD stayed above zero, and we have multiple crossovers in that time period, which would have been additional buy signals to the upside here. Entry point there, which is this level here. Another nice crossover and a separation was this general area. Another nice crossover here before this eventual thrust to all-time highs. So the MACD was looking very good, but now we start running into trouble here when we break this trend, and we see the MACD push below zero for the first time in many years. Right here, there was a break back to zero, which was a first warning sign, and if we draw a straight line connecting these lows here, you see there was a trend break there, so that was another red flag there. So gold was starting to get tired even at that time frame. The thing I noticed when I was looking at this chart purely from a MACD standpoint is here you see the MACD trying to cross over back above zero, fails, comes down, and so you draw a line. You'd like it to clear that level. So you see what happens here is that we went above the MACD and back below it. In other words, what should have been a buy signal with a breakout above this range here turned into a movement up and back below. So remember, uniformity tells us that something is going on, and that was a bearish signal. I also noticed that if you take a look at this movement here, was uniform. So this here was a sell signal here, March of 2012, which is this break here. Okay, that also coincides with this eventual move below zero here, another sell signal. Now you'll notice that, let me go back and explain something here. We talked about initially there was an attempt to move above zero here that failed, and so gold was starting to move higher. A crossover above zero is always strong, but what happened is it went above that and below that, and that seems to me, again, and I'm not stretching it here, you'll see that this is very uniform back below the line. And also we break these lows here on the MACD. Once we break those lows on the MACD, it's telling you that momentum is starting to generate and pick up steam to the downside. So lots of things were going on as gold was trading in a range, and I would say this was it was range bound here. You can see for the first time in many years we were starting to see that the MACDs were breaking trends, like right here, moving below zero there, and also breaking another trend, which is this low was broken. So another break of this MACD low here was another sell signal here. So by the time we start getting into this general area here, even though it was trading in this range here, you can see the MACDs were already telling us momentum was starting to break to the downside there. So that was a sell signal. There was another sell signal as it moved below zero there. There was also another sell signal as it broke below this lows here, which was this level here. So another sell signal there. Okay, so lots of sell signal. Another sell signal is when it breaks this trend there. So yet another sell signal in gold there. So lots of things in the MACD were taking place, and this might explain now why we started seeing this move lower. Remember, if you use the RSI, if you use other indicators, this could have been confirmed, but just for now we are looking at the MACD. You'll notice most recently during this attempted breakout here, take a look at what the MACD did here. This MACD has uniform action. It goes above it and back below it. So that uniform action is what I call uniformity, and it tends to be a bearish signal if it happens up and then down, back below zero. very dangerous. And then you come to make matters worse, we broke that support trend line. So this here was another sell signal. Many reasons to get out of gold. Now recently, as you can see right now, there was yet another uniform action above this zero line, above zero. That looks like an inverted U. That is another sell signal. So we see this was also another sell signal. Now if you look at this chart right now, you don't see a buy signal in gold because this crossover here is happening below zero. Crossovers below zero don't tend to be very powerful. You want them to move back above zero. And also we haven't seen, for example, we haven't seen it break out of this range. Maybe if the MACD can move above this range and push above zero here, and this MACD break out at least above this highs here, then maybe gold could be in play. So the MACD could have told us over the last couple of years that the chart was not strong and it was gonna go lower, which is what has taken place. So the MACD is very important. By itself, it gives you keys into what's going on. If you combine it with other indicators, other factors, then you get a clearer picture. Here it was telling us, and is still telling us, that gold is not strong. Eric Moade, good luck, peace, and blessings.